Okay, let's dive into this. Welcome to The Explainer. Today, we're looking at a totally fascinating intersection. It's where massive global economic forces crash right into the physical, on-the-ground reality of resource extraction. We're breaking down Nova Minerals. This is a company sitting squarely in the middle of some of the most dramatic commodity price action we've seen in recent history. The big question we're exploring today is, how does a company positioned in this hypercharged macro environment actually go about executing its strategy on a micro level to unlock real value?
So here's our roadmap for The Explainer. Section 1 is all about the macro commodity boom. Section 2, we're heading up to Alaska to look at Estelle, their district-scale project. Section 3 covers their dual-track strategy. And finally, in Section 4, we'll open up the books and check out their current financial health.
All right, let's kick things off with Section 1, the macro commodity boom.
To really understand the strategy of any resource exploration company, you've got to understand the underlying assets, right? Well, in 2025, the macroeconomic tailwinds have shifted dramatically. Let's start with the benchmark everyone knows, gold. Looking at the market reality of late 2025, gold has completely shattered previous ceilings. We're talking about exceeding $4,000 an ounce for the very first time. This isn't just some tiny marginal bump. It's a total paradigm shift in how gold deposits are valued. Projects that were maybe just marginally profitable a few years ago, suddenly at these levels, they have entirely different economic profiles.
But hey, as impressive as gold's run has been, it's actually the critical mineral antimony that's seeing an even more dramatic spike. The price of antimony has surged to nearly $63,000 a ton. To put that into perspective, that means the price has literally more than quadrupled since early 2024. Crazy, right? So why the massive jump? Well, antimony is absolutely crucial for military and industrial applications, and right now, there is zero U.S. domestic supply. With major global players like China banning all exports, Western nations are completely scrambling to secure this essential material.
That brings us to Section 2, Estelle, a district-scale project.
Okay, so we have these record high prices, but where do you actually find these minerals? For Nova Minerals, the answer is the Estelle project. And folks, this really captures the harsh reality of exploration. You're looking at an active drill rig at the RPM deposit, right in the middle of the snow-covered, super remote terrain of Alaska's prolific Tintina Gold Belt. You know, the macro numbers on a screen don't mean much without this physical, grueling work, drilling holes deep into the ice to prove exactly what's hiding beneath the surface.
And what they are proving up out there is massive in scale. The Estelle project spans 514 square kilometers of state-owned, mining-friendly land in Alaska. It is huge. It hosts over 20 known gold and antimony prospects. Across its two main gold deposits, Korbel and RPM, they have a JRC-compliant resource of 9.9 million ounces of gold. Let that sink in. This scale makes Estelle one of the largest undeveloped gold projects globally. We aren't just talking about a single mine here, it's an entire resource district.
Now, what's really interesting about this is the stark contrast. Back in 2023, Nova completed a scoping study, and they used what we now know was a very conservative base gold price of just $1,850 an ounce. Even at that price, it yielded an estimated pre-tax net present value of $654 million with a really solid 53% internal rate of return. But when you overlay the 2025 reality, with gold exceeding $4,000 an ounce, the fundamental economic outlook of the project significantly changes. And remember, that older study didn't even factor in the antimony potential.
Moving right along to Section 3, the dual-track strategy.
Having a massive asset is step 1. Step 2? Well, that's getting it out of the ground without diluting shareholders into oblivion. Track 1 of their strategy is focused entirely on gold, and they're using a phased approach to really limit capital risk. Step 1 is to build a smaller-scale, low-capex starter mine at the high-grade RPM deposit. The goal there is to generate early cash flow. Once that's flowing, Step 2 kicks in, self-funding the scale-up into a much larger operation at the Korbel deposit. It's a clever setup specifically designed to minimize upfront dilution.
So, the crucial point is how they handle the critical minerals track alongside the gold. While they're advancing the gold, Nova is aggressively fast-tracking its antimony assets. Recognizing the huge strategic vulnerability of relying on foreign supply, the U.S. Department of War, which you might know as the former Department of Defense, awarded Nova $43.4 million. The explicit goal of this funding is to onshore a fully domestic integrated antimony supply chain right in the U.S. They're targeting Phase 1 military-grade production as early as 2026 or 2027, with the potential to expand for industrial use down the road.
And finally, let's look at Section 4, current financial health. Now, ambitious plans and government grants are great, but at the end of the day, cash is the ultimate constraint. By the end of September 2025, Nova was sitting on a really robust foundation. They reported over 86.3 million Australian dollars in available funding. That includes 17.5 million in cash, plus that 43.4 million US dollar award from the Department of War. And crucially, they have absolutely zero debt. Their earnings per share for the quarter ending June 2025 was a negative 4 cents. Honestly, that's exactly the standard reality you'd expect for a company deep in the heavy capital investment phase well before production actually begins.
And this brilliantly illustrates the point. Looking at their consolidated statement of profit or loss for the year ended June 30, 2025, we see exactly where that money is going. There's a total comprehensive loss for the year of roughly 10.5 million Australian dollars. The expenses are exactly what you'd anticipate: administration, contractors, and running those expensive drill programs. This purely reflects the necessary expected cash burn phase. They're securing permits and executing complex engineering studies to get everything prepped for future operations. Which brings us to the ultimate question for you, the viewer. We've seen the unprecedented macroeconomic tailwinds of $4,000 gold and skyrocketing antimony prices. We've seen the 9.9 million ounces of gold sitting in the ground up in Alaska, and we've walked through their phased execution strategy, which is backed by zero debt and major government funding. But as anyone in this space knows, the hardest step in the entire mining industry is making that leap from explorer to producer. Will Nova Minerals successfully execute this ambitious dual-track strategy and move from consuming cash to actually generating it? It's a massive endeavor and for sure one to watch closely. Thanks so much for joining us for this explainer.